All right, it's Monday morning, 7:55 a.m. Central Time. Let's jump into the exercise and plan out some trades for today. So we're using the 44.93 half to 45.03 half as key support, and as long as buyers can hold ES above that zone, there would be potential for the market to stabilize, and eventually we could see a breakout above the overnight high for a move back up towards the 45.36 half high volume node, as well as the 41 to 51 resistance. And in order to get a sustainable breakdown below Friday's low and below 44.93 half, we would need to see some signs of initiative selling in real time. So given that 44.93 half to 45.03 half is a important area of support, it's a spot that we've had marked up as the bull bear zone for many days now. We're going to need to see a lot of evidence in real time in order for that zone to be taken out. So I think we do need to exercise caution on the short side, especially at lower prices. It's one thing if the market gets overextended or exhausted into resistance, then there might be a short setup available. Although if we get a breakout above the overnight high today, then that would be a sign of strength, and the market would be reversing off of the zone that we've had as the bull bear zone for quite some time. So there may not be a ton of opportunity on the short side if we get a successful breakout today, simply because of where the market would have based and where that upside move would have launched from. So I think today we do need to be more careful on the short side, and that means playing more defense, perhaps entering at good enough location where even a relatively small reaction can give you that first scale out at 1R that allows you to manage your risk a bit better and at least not get run over if buyers really do step in. Because again, with the market testing the bull bear zone and larger time frame support that is directly below the bull bear zone, what we're looking for today and over the next day or two is for larger time frame buyers to step in. So if that happens, if that bullish scenario starts shaping up, then there may not be a lot of opportunity on the short side, and there is the risk of getting run over because the traders coming in this morning may still be fixated on the sell-off from Friday afternoon, and they might be trapped in recency bias and just focused on shorting, probably because they missed the short Friday afternoon, which usually gets a lot of traders to be even more aggressive on that side, even though, of course, missing a trade has absolutely no bearing on future price movement. But that's just how the mind works for so many people, and it's typical. That's how normal people behave. So there's nothing wrong with that. That's kind of the default setting. So we have to be open to that possibility of larger time frame buyers stepping in, and if they do step in, that is where it would create risk for aggressive shorts. So we're going to be careful today on the short side, and again, it doesn't mean that we're not open to shorting opportunities, but we just need to see a bit more evidence, or we need to get good enough location where we can mitigate our risk fairly quickly, and that is what allows us to then play defense. Because if you're in from poor trade location, you don't really have the option of playing defense. At that point, just ride it through. The only way we can actually play defense is if our entry is good enough. If the entry is terrible, then we don't really have many options. Then the trade is kind of not in a good spot to begin with. So first, let's talk about the long side. So we have key support 93.5 to 45.03 half, and if that area holds, there would certainly be potential for the market to head back up towards the overnight high. And on the upside, if we break above the overnight high, I think we can test the 36 half high volume node. So an entry at 44.99.75 would give us 3R into the initial resistance zone and the high volume node. So if we look at the visualization of that trade idea, you can see that the scale out is at 4507, which again, if the zone is going to hold, it should be fairly easy to hit. Now, if you want to play a bit more defense here and get your scale to be perhaps near 05 or 04 half, which would be very easy to hit, then your entry will need to be 98 half, which is okay as well. So we can leave this at 98 half, and in the moment, if it seems like we need to be more aggressive, we'll need to use a slightly different tactic. So I'm going to set up a couple of different longs around this 93 half to 03 half area, and the difference is going to be that this is kind of the more conservative long idea, 98 half, stop behind the zone. I'm going to create a copy of the zone, and that's going to give me one more, even more conservative idea. So prior to Friday's low, this zone was, I believe, 44.91 quarter was the low of the zone. So if I'm going to be more conservative, and let's say in real time we are seeing a bit of weakness, I may want to put my stop down near 90 or 90 quarter, which would take that previous zone into account. So if we do it that way, and we're using these targets, again, 98, it's only a 2-tick difference, you might say, but sometimes that is the difference between a winning trade and a losing trade. So we'll have this ready to go as well with 90 quarter. So that is the most conservative bull bear zone trade idea or execution idea. Now let's get a little bit more aggressive. What happens if the market just fills the gap and doesn't actually push much lower into the zone? We might be able to use a more aggressive stop somewhere within initial support. Now, the real invalidation point is behind Friday's low, right? So again, this is just 1 or 2 ticks of difference here, but what I'm going to do is I'm going to create 2 trade ideas or execution ideas. One is going to be leaning on the RTH low and just placing my stop at 93. Now again, the difference here is a mere ticks, right? It's a few ticks, a couple of ticks over here difference on the stop placement. But again, that might be the difference between me getting a fill and missing the trade. So 4,500 would stop at 93. So not 1 point beyond the zone, but just 1 tick below Friday's low is another trade idea. One more execution that I think makes sense is to lean on the overnight low and the previous close, where the market may just kind of make a move down into 98, 97 half, and then it turns around. So we're going to lean on the previous day's close of 98, and based on that, and we're going to set this to, so let's move this to 36 half. And when it comes to the stop placement, let's actually look at the low here from Friday. So I think what I would want, so stop being near Friday's low is certainly going to be good enough, but I think we can even be a bit more aggressive than that. I think that we can have our stop just behind this little swing low, which is 97 half. So I think we can be a little more aggressive with our stop placement, and this would be the most aggressive way to enter the trade, at least for me, because I don't want my stop to be just behind the overnight low. I would want my stop to certainly be beyond the gap fill and beyond this little swing low here, which is I think 97 half or so. So if my stop's at 96, that's okay, and that would mean I can buy 0375. Again, I want my stop to be a bit lower, so 96 is the stop, and if I'm looking for 3R, I can buy 02 half. So this is my execution range: 44.98 to 45.02 half. And depending on the real-time situation, I can pick one of these, assuming the market even goes down there, which so far, it doesn't seem to be setting up that way. And then what happens if we break below initial support? Well, I would still be a buyer below initial support because my hypothesis is that in order to get a bigger breakdown below initial support that actually really turns the market bearish on the larger time frame, we would need to take out 44.70. So if the market is breaking down on excess weakness, big and sustained downside momentum, then there might be a shorting opportunity on a break of the 93.5 to 03.5 zone, but I'm not expecting that. Again, we can prepare for it, but that's not the expectation. But in the event that we do go down to 70, 73.5, I would certainly be a buyer in that area, and I would even consider buying the zone at 74.5 to 84.5. So we are going to set this up to be a daisy chain type order here. 73.75 will be the entry. I want my stop to be down at 65 or so to give the trade plenty of room to work out. So we're going to do that, and the stop I might change depending on the real-time situation. Now, if we break below Friday's low, then the targets may have to be a bit more conservative. So in that situation, I think if we get a momentum shift off of the 44.70 or 73.5 area, or even the 74.5 to 84.5 area, as long as we get a momentum shift, I think we can still go back up into the overnight high. So I think the final target would still be 20.5. The high probability target in that situation, I think should still be close to perhaps the overnight low for the current session. So 99.75, I think, can quite easily get hit. So, you can see that the 73.75 entry or 74 entry would give us 3R. So that looks good. I'll leave that at 73.75 simply because we have the stop at 73.5 here. And this I'm also going to change to 99.75 and 20.5. And 81 would give me 3R. So that's a potential trade, but the 73.75 is the really attractive one. Again, if the market puts in a breakdown. Now, below 44.70, I am not a buyer because in order to break down and hold below 44.70, it would need to be a trend down type situation. And if we're breaking 44.70 on trend down conditions, then I am not interested in buying the support areas below. I know that the 33.5 to 42.75 is a range extreme, but if it's happening under trend down conditions, it won't matter that it's a range extreme. We can still close somewhere near the lower part of the day's range. So even though it's a range extreme and it's probably good for at least a reaction, if nothing else, I'm not that interested in buying there because the conditions that would be necessary for the market to even get there would not be conducive to a long setup. So this would be a zone fade for a tradable reaction at best. So I'm not concerned about that. So that covers the long side play. And on the upside, like I said, given the current market context, I'm not really interested in shorting opportunities because I think there is potential for larger time frame buyers to step in. Now, that being said, I think that a short may materialize, but it will require the market to be exhausted into resistance, or there would just need to be a very clear real-time signal, like a very obvious bearish divergence on the advanced decline, or a momentum shift or something along those lines. I think today it can be a bit risky to get aggressive on the short side. So we're going to set up some potential trades, but with the understanding that we may not execute any of them, on the short side. So short side, I am going to be a bit more cautious today. And if the market, kind of does something crazy where it just moves maybe too far too quickly, then sure, there might be something there. But given where the market's trading, given the type of zone that the market has tested during Friday's closing action and in the overnight session, that bull bear zone, there's potential for a reversal back up. And there's potential for larger time frame buyers stepping in. So in order for me to consider shorting the market, I would need to see signs that point to an absence of larger time frame buyers. So I don't necessarily need to see something very bearish. If I'm seeing a clear absence of upside momentum, then that may also be enough to short the market. So we will set up some shorts. I'm going to make a copy of initial resistance, and on this one I'm essentially placing my stop beyond the HVN to see kind of what the ideal entry is within that zone if I'm going to play defense. So that gives me two potential ideas on entry at initial resistance. Now, if sellers step in at initial resistance, or we get a bit of an overshoot and then sellers step in ahead of the high volume node, then in the event of a failure here somewhere, there would be potential to go back down into the swing low here around 10.5 or so. So I'm going to use that as my high probability. So 1075 for now will work as the high probability. And the final target in this situation would be the overnight low area. So I'm just going to actually make a top of initial support, 45.03.5. So we can see that 2650 would be needed here and 31.25 would be needed here to get 3R. Again, these are potential ideas, but whether they trigger or not will determine on the real-time market read. Above that, we do have slightly better resistance at 41 to 51, and then the real critical point is 54.25 to 60.75. So those are potential trades that may trigger today if the market gets exhausted. My only concern is that if the market reaches 41 to 51 and especially 54.25 to 60.75, just the fact that the market has reached those areas is a bullish indication, and eventually it could lead to a move back up into the 45.80 to 85 area, and even higher eventually. 45.88 to 45.96 could come into play. So I think that if we reach the 54.25 to 60.75 zone, it's already going to be quite a bullish indication. And at that point, we can get, again, reactions off those zones. But the market may have built a base to launch from, and I would not anticipate a do-over of what we saw Friday afternoon. So we can get reactions then, we can consolidate, we can balance, and it can take some time to process this area, the 41 to 51 and especially 54.25 to 60.75. But the likelihood of the market reaching this zone and then turning around and completely failing, I think is low. I think if the market is going to resume the selling that we saw Friday afternoon, sellers need to hold ES below the high volume node of the current developing range and balance, which is 45.36.5. So I think if the weakness is going to continue, we need to hold below 45.36.5. And if we don't, and if we slice through 45.36.5, then we might have built a base and we might have found a floor, and those larger time frame buyers may now be stepping in, and we could then be setting up for an eventual move into 45.88 to 96. And that's the reason that I need to be careful on the short side at those upper zones. You might say it's better location. Yes, but I think the targets aren't going to be as good. I think that at that point, our high probability target would need to be the 36.5 HVN, and I'd like to get out a little bit ahead of that. So if we are using 37, as our target, it doesn't give me really a lot of options to short 41 to 51, since I want this to be my high probability. And my final target in this particular situation, I think would not be much more than the overnight high area. So right now it's 22. Let's just get out ahead of that at 23. So we'll use 23 as the final. So you can see 55 quarter and 47.75. That is what I get over here. And 55 quarter would of course be much more attractive, especially if the market is exhausted into it. And the same goes for even this area. So I think if the recent bearishness is going to continue, then initial resistance is really going to be the spot where the short will make sense, because if this bearishness is going to continue, this is the area that needs to hold, right? 36.50, the high volume node is what needs to hold. So this 31 quarter short is more attractive, even though it's at worse location, because anything beyond that, and then the probability of the market reaching the overnight low again and the gap fill again, that would be relatively low. So a lot of times, the targets are what are going to provide you enough clarity to figure out, hey, do I even take this trade? Off of initial resistance, we can still target initial support. And that's why 20.5 to 30.5 would still be an attractive area to consider shorting. But if the market ends up pushing much higher than that, then the low of day is likely in, and I wouldn't be looking for aggressive, shorting opportunities. If anything, there might be a intraday balance breakout setup that might make more sense by that point in time. So that is how I'm looking at today, and all these trades are of course in alignment with the morning trade plan that gets posted for E-mini player members 30 to 45 minutes ahead of the open. But this just goes into more detail, and we're talking about specific trade ideas based on the morning trade plan. So that is going to be a wrap for now. Thanks for watching, and if you found it helpful, then please do share it with other traders, and until the next one.